Peter Lynch made a crap ton of money in the stock market. And the stock market is way more competitive than, say, the crypto market, right? In the crypto market, there's a lot of beginners, there's a lot of inefficiencies. You don't need to know that much data in order to beat the crypto market. But the stock market is a different beast, right? In the stock market, there's all kinds of institutional investors, there's all kinds of Einsteins and quant funds, etc. Beating the stock market consistently is very hard, and Peter Lynch was able to do so. That's why I think it makes a lot of sense to listen to what he's saying. He's a person that doesn't come along that often. So here's what Peter Lynch said. The trick is not to learn how to follow your gut feelings, but to rather discipline yourself to ignore them. Now this quote continues, but I want to talk about this, the gut feelings in investing, because a lot of people actually approach investing with gut feelings. And sometimes gut feelings are right, sometimes gut feelings are wrong. Now here's something I want to share. I want to share a story about my gut feelings in investing. And of course, sometimes gut feelings are right, sometimes gut feelings are wrong. But I want to share a specific point in time, and that is the Corona crash. That is when Bitcoin fell by 60% in a single day, or within 48 hours roughly. And at that time, I was already pretty heavily invested in Bitcoin. So I saw my wealth drop by, I don't remember, roughly 30% or so in a matter of 2 days. And yeah, you can imagine how my gut felt at the time. When you've never experienced something like this, the first reaction is to simply just freeze. Some people might panic sell, but if you're really emotionally affected by this, you're just freezing. You don't know what to do. You're overwhelmed by the situation. You're not buying, you're not selling, you're not doing anything because it's simply just such a new situation to process. And you're trying to grasp straws, you're trying to figure out, what should I do in this new situation? Suddenly Bitcoin crashed to a degree that I would have never expected before. So what do we do then, right? Is the best call to action really to do nothing? Of course it's not, right? When Bitcoin was crashing, the best call to action was to sell everything else that you had and to buy that bottom. But most people didn't, right? Very few people did. Most people just sold or didn't do anything. And so here's how this worked out for me. I did not buy the perfect bottom. I had to process first for a few days and then bought for a slightly higher price. I did rebalance my portfolio. I did sell some of my stock to then buy the dip during the Corona crash. Unfortunately, I didn't buy the perfect bottom, even though I saw it. Like I live followed the price charts. Like I looked at the minute charts, how it went up and down and further down and further down. I didn't press the buy button simply because of gut feeling, simply because of emotions, because I was overexposed to relative what I felt comfortable with. Right? If you're not comfortable with a drop of 30% of your wealth, then you shouldn't be with 50% of your wealth in Bitcoin. Right? Then you should have a smaller allocation, which I didn't have at the time. Now that's the example for a crashing market, but it's even more pronounced for a rising market actually, especially when you're an influencer, especially when you share your opinion to an audience. Because let's say we aren't in a massive crash, let's say we are just in a bear market. What usually happens in a bear market, right? The prices trickle down, we go down by say 60, 70, maybe 80% over the span of a year, or maybe 1.5 years. What happens then at the end of the bear market is that all the moon boys, right, all the people that were hyper bullish in the bull market, they simply don't follow crypto anymore, right? They're simply not in the market anymore. They're out of the market, they have different interests. So what happens is that the people that stick around, they say, yeah, prices seem to be low now, it might make sense to buy. And so you don't hear a lot of voices that tell you not to buy when you're actually buying the bottom in the bear market. You don't have to be that contrarian because there's nobody to be contrarian against, right? Because all the bull people, they're already gone. This is very, very different to a bull market. In a bull market, everybody is bullish. Everybody thinks prices continue to rise. And when you then have to form an opinion to actually sell, when there is maximum euphoria, then everybody around you tells you it's the wrong time to sell. And when you then even have a crypto channel and you say, I am selling now, then people don't want to hear this for several reasons, right? They might have just entered the market, maybe then it's dropped a little bit, then you say, I'm selling, then they suddenly have to realize losses. They point towards you and say, you have been bullish all the time, now you're suddenly flip-flopping, now you're suddenly selling. You get all this backlash. If you say that you believe that the price will rise of an asset, then everybody is applauding you. Everybody gives you a like. A lot of people will subscribe. This is also then, of course, supported by the YouTube algorithm, right? A lot of likes, a lot of subscribes leads to more reach. But when you do the opposite, right? When you are contrarian in a euphoric market and you sell when meme coin trading is at its height, then nobody will like this. Nobody will subscribe. Some people will unsubscribe and you will get a lot of hateful comments. You have to have an incredibly strong mindset to sell the top. You don't need that strong of a mindset to buy the bottom, especially during prolonged bear markets. In a crash, it might be hard, especially if you had been previously heavily exposed, right? If you had already a lot of Bitcoin, then Bitcoin goes down 50, 60%, then buying that bottom is very, very tough. But if you're simply just tripling down and you've got your regular cash flow and you buy into Bitcoin regularly and all the bulls are already gone and the people that stick around, they are bullish anyways, you don't have to be that contrarian. But selling the top is very, very different. Selling the top is always ultra contrarian. It's very, very hard, practically speaking.
This video is sponsored by the premium membership. I never take any money from any crypto project. I never take any affiliate links from centralized exchanges. I never pump and dump coins. Instead, I offer valuable tutorials in the premium membership. Feel free to check it out.
And so that's how gut feeling can be a problem, right? The gut tells us everybody around us is still bullish. The trend is likely going to continue. We shouldn't sell. But the numbers say that some other long-term holders have already sold. The numbers tell us that we're already overexposed to crypto after this bull run relative to the rest of our portfolio. Everything actually flags red. But our gut says just a little bit more, right? We'll continue just a bit more. Let's just keep riding. We've just hit the all-time high. We're in price discovery mode. There's all kinds of justifications we give to ourselves. So I completely agree here with Peter Lynch. You have to ignore your gut feelings. You have to instead have a system how you evaluate whether or not something is cheap or expensive. Then you have to stick to that system. And that's where I come to the second part of this quote. So here's what Peter Lynch says. Stand by your stocks as long as the fundamental story of the company hasn't changed. Now, I think this needs to be expanded, but first maybe a bit about the background of this. Why would you stand by a company when the fundamentals haven't changed? Why would you even have to say this, right? When a company is great, shouldn't the price of the stock tend to go upwards? The answer is, unfortunately, no. There is a lot of correlation in the stock market. There's a lot of ups and downs that are simply created by how much liquidity there is in the market. So we see this all the time, right? We see how, say, the S&P 500 is going up by 3%. Then on that day, all other stocks are going up as well. Same the other way around, right? S&P 500 is going down, the index is going down. Pretty much all of the stocks are going down at the same time. And the same is true in the crypto market, right? Everything is going up on one day, everything is going down on one day. So very high correlation based on liquidity in the market. And I think that's the main idea behind this. You want to stick with your strong assets despite liquidity changes. So the overall stock market might go down by 50%. Your company's stock might also go down by 50%, maybe by 40%, but you don't even notice the difference that much. And you have to stick it out. You have to stick around. Because actually the price didn't go down because of the company. The price only went down because of the general market going down. And so that's why I have a different approach to most people how to actually look at price charts, how to evaluate stocks, how to evaluate cryptocurrencies. Most people just look at the US dollar chart. But again, the US dollar chart is totally overshadowed by those liquidity movements, right? Have two different cryptocurrencies next to each other or two different stocks next to each other, maybe from the same sector. Have a look at, say, the Google stock chart in the last 5 years and the Microsoft stock chart in the last 5 years. I'm just randomly picking two stocks. Look at those two charts. They look eerily similar because, again, liquidity is driving most of the US dollar price action. So what I personally do in order to remove that effect is I always look at relative valuation. So I look, say, at the Microsoft stock and I take that stock price and I divide that stock price by the NASDAQ 100. So I look at the relative performance of Microsoft to the NASDAQ 100 so that in the end those liquidity fluctuations actually don't have any impact on my analysis. I don't look at the price with the liquidity fluctuations. I ignore those. Thus, when we then look at the chart, we can actually see, are there maybe some investors that are still fundamentally convinced of that company that still hold through the crash? Right? When the Nasdaq is crashing and Microsoft itself is crashing less, then on that relative valuation chart, the Microsoft price is going up. So we see much less volatility in those charts. We see trends that are much clearer in those charts. And of course, in the end, we want to earn US dollars, but when it's about picking the right stock, we should only think in relative valuation. At least that's what I believe. If you want to time the market, then time the market. Then try to analyze the market, try to find out, are you currently in a bull market or in a bear market? Do that analysis separately. Once you think that we are in a bull market and you think US dollar valuations across the board everywhere are likely going to go up, and you then want to make the decision, what kind of individual asset should I buy if you want to buy individual assets in the first place, right? Maybe it makes more sense to simply just buy the benchmark. But if you do want to buy individual assets, then just plot relative valuations. Then looking at the US dollar prices makes zero sense. There's another gem in that quote, right, that we have to stick around with our stock if the fundamentals haven't changed. And I believe that we shouldn't change in general our investment thesis across the lifetime of the trade, across the lifetime of the investment. So if you are buying, say, Microsoft, because you believe Microsoft will be the leader in AI, because they acquired OpenAI, if that's your thesis, then you should only sell the stock when you see signs that Microsoft might not be the leader in AI in the future, or when you think that AI might not be as relevant as people anticipate now. That's then when you should be selling Microsoft. If you're buying an altcoin because you believe an influencer is going to promote it in the future, this is, by the way, what we do here in Premium, right? We track all kinds of influencer wallets, and we see what are various influencers buying before they then announce this on YouTube, because once they announce on YouTube, a lot of people buy in, right? Push up the price. So we try to front run other influencers' audiences by tracking the influencer wallets. If that's our thesis, right? We buy because we anticipate a promotion by an influencer in the future on YouTube and the price will go up, then we have to again verify this, right? We have to look at how long does he normally take from purchasing to promotion? Did he promote in that time frame? And what do we do in case he doesn't promote it? What do we do in case the promotion didn't move the price? We shouldn't then suddenly start changing our investment thesis, right? Say this influencer bought a certain AI coin and we bought it solely for the reason because we think that influencer will promote it, then the promotion doesn't happen, then we shouldn't just keep on holding the asset because we think it seems like this asset is fine, it seems like this AI coin is okay, I just keep it now for the long term. I think that's a mistake. I think it's wrong to change the investment thesis. If you're doing a short-term speculative trade, keep it short-term. If you're doing something long-term, keep it long-term. Simply have a plan of when to exit something and stick to that plan, because once you don't, then things become again very irrational, things become very emotional, things become very fuzzy, and then in the end you might hold onto a loser and you don't really have an exit plan when to sell that loser. You simply just bought in the hopes that it goes up, but you never really had a strategy of when to actually sell. So again, to get this quote in full, let's read this one more time. The trick is not to learn how to trust your gut feelings, but rather to discipline yourself to ignore them. Stand by your stocks as long as the fundamental story of the company hasn't changed. If it's your first time here, feel free to subscribe. I publish this regularly. Like would be very much appreciated as well. There's also a Telegram group. If you haven't joined it, our Telegram, feel free to check it out. The link is down below. See you over there.